And so this is a good sign. The more gold moves up, it actually tells us we're getting, I think, closer to an economic reset, a financial reset. And gold is kind of that global barometer where everyone around the world sees it as a way to store value and to get out of the stock market, to get out of real estate, and to keep your money out of the banking system because they could go bankrupt.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 3rd through February 10th, 2025 while supplies last. This week we feature pre-33 AU $20 gold St. Gaudens coins at just $50 over melt per coin. We also have backdated silver Austrian Philharmonics at just $2.85 over spot. Backdated Canadian 1-ounce gold maples are just $59 over spot. And pre-65 junk silver dimes and quarters are at the lowest price in years at just $1.49 over spot. Pre-65 junk half dollars are just $1.69 over spot. And 1 10th-ounce Gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thanks for joining us today.
Hey, thanks for having me, Elijah. Always a pleasure to chat.
Well, it's great to have you, especially during this exciting week in the gold market, gold making new all-time highs here. Did you want to maybe share the chart of gold here? See where are we at right now?
Sure. Yeah. It is exciting. Gold's on a run. I think it's going to push up still quite a bit higher. In fact, if we take a look at the charts, and gold is on a breakout. So gold has gone through a series of stair-stepping price actions higher. So we've had rally and pause and a series of these big rallies and pauses. And now we're starting at the next rally phase. And just based on the momentum here, and if we use Fibonacci extension, which is one of my favorite technical tools, we can get a gauge of how strong this upward momentum is, where price should pause, where it should hit the next key target. And so we can figure that out by understanding how strong this last rally was, the strength of the pullback that we saw back in November. And then we can project that forward to where we think that price or where price is now. And so more or less, there's two key levels when we look at gold and using Fibonacci extension. And the first one here is a 618, meaning 61% of this rally that we saw previously is going to be the first area where it starts to chop around and struggle a little bit. It hit that price level 2 days, had some big pullbacks from that level. Now it's kind of broken above it. It came back down and tested this level. And that is a good sign. When something shows a little hiccup on the chart at the 618, we almost always go up and hit the one level, which is 100% measured move, meaning the strength of the first rally will be the same percentage-wise or same move on the second rally. And so that is where we're headed. And that brings us to about 3,050 for gold. And so we still have some pretty good upside potential from where we are. That is about a 5.5–6% move. And gold to me is kind of the ultimate play at this point when we're in a late stage of a stock market where I think the stock market and the economy getting very close to a top. This is when we see gold come to life. And gold has been rallying and leading the way for the past year or so, just kind of flying higher. And so this is a good sign. The more gold moves up, it actually tells us we're getting, I think, closer to an economic reset, a financial reset. And gold is kind of that global barometer where everyone around the world sees it as a way to store value and to get out of the stock market, to get out of real estate, and to keep your money out of the banking system because they could go bankrupt. And that's why physical gold, I think, is doing well, is because people are they're preparing for what could be another big, market correction. And there's a lot going on with big money or big gold, physical gold moving to the States. I think that's got people rattled as well. So I like gold. I like it more than everything else in the precious metal space. I like it much more than silver. I like it a lot more than miners. To me, gold, physical gold is the play right now.
Now mentioning, I guess, the physical market, your perspective on maybe what you've been hearing with respect to maybe the different players, as you mentioned, maybe gold coming to the US. It seems like on the retail side, premiums are way down, which signals to me that, it's not the mainstream that's moving in right now. It might be the insiders that are kind of driving up the price. But what is your perspective?
Yeah, I don't know. I mean, I don't dive too deep into those big moves when it comes to like big money shuffling around. I mean, the markets are somewhat rigged, right? And there's a lot of manipulation going on. And there's a million conspiracy theories around pretty much everything, especially in the United States and around gold. So I don't know how to gauge it. I try not to go too deep because it's a dark rabbit hole and it can consume you. All I know is it seems kind of fishy. And I think it means something's coming down the line that we don't know, whether it's tariffs or something to do with gold or currency, or I don't know. But I think it's all we need to know is it's a warning sign that there's something going on. The U.S. wants gold, physical gold in their country. And to me, it's a warning sign, meaning something's up and you've got to own gold. So I'm not sure how to really look at it other than people want their physical gold and because they believe something, they don't trust it where it is now, or they want it in their hands.
And what specifically with respect to imports are you referring to into the U.S.? I know we've heard a lot about, the Chinese central banks and other central banks purchasing gold, but in the U.S., it sounds like gold is also being imported.
Yeah, I mean, I just saw a report on it saying that the U.S. has called a ton of gold from the U.K. reserves, like London or something, and they're like, and London's like completely empty. They can't even get delivery of gold. So, I mean, I don't know the fine details. I don't dive too deep into it, but I've heard a lot of people talk about it, and it seems to be a big thing. So, I think it's the United States themselves bringing physical gold over to store it. So I don't know what it's about. All I know is there's a lot of physical gold shuffling around and countries are loading up on it, not so much the individuals, as you said. And so I think that just goes to show if leaders in countries are starting to stockpile it and reshuffle it around so it's on their own ground, that is a sign that I think they see chaos coming. And I mean, the perfect example for the power of precious metals is a few years ago, we had the internet go down in Canada. And there was only like a handful, like 5 internet providers, and Rogers, the biggest one, pretty much powers almost everywhere in Canada. It went down, and I had to go in town to find internet so I could do a morning report for my subscribers. And you couldn't do anything because the internet was down. And a guy came up to me, he goes, "Chris, you wouldn't believe it." He goes, "I just filled my car up with gas with 2 silver rounds." And it's funny because as soon as the internet goes down, the only thing that has value, or the only 2 things that kind of have value, is like physical metals, because you can't use the internet, and then like obviously weapons, force, Bitcoin, crypto. None of that stuff works when the internet goes down. And I would think we're going to be more so if war and difficult times ever hit. I mean, the internet's probably going to have problems. We're going to have like power outages. We're going to see all kinds of, who knows, EMPs, magnetic pulses, all of these things. So physical metal is such like the old barbaric way of storing value. Like all I think is like horses and castles, right? But it really is the ultimate thing when push comes to shove. Gold and guns is really where it's at.
Definitely. I mean, I'm just looking at this now. It looks like 4.5 million troy ounces are being moved out of London vaults in January here. So that's a lot of gold, and it seems to be spurred on by a concern over tariffs. And we'll put that link in the description of this video here to that article. It looks like on mining.com. Also, Bloomberg had that. So. And I guess this just gets to your point about holding physical metal, right? Then you don't have to worry about, third-party risks, storing it somewhere else. But yeah, your perspective on this movement that we've seen and how it kind of plays into how, just kind of holding metal in your hand, it might be the best option.
For sure. I think, having the real thing is the key. You really can't trust others all the time. And, when things get real difficult, that's when you really can't count on people, because people change under pressure and duress and stress and all that stuff. So physical, having some on hand, having a bunch stored away outside of the banking system, I think is pretty good.
Definitely, definitely. And when it comes to silver, what is your perspective on that? Obviously, we're far from all-time highs right now, but we still have had quite a run up, and it's performed pretty close to where gold has performed if you just look at the last year.
Yeah, I mean, if we take a look at the silver over the last couple of years here, from 2023 on, it's had a really nice move. As you mentioned, yeah, it's similar. It's had a series of kind of rallies and pauses. We've had a rally up, a big pause, another rally. We're kind of in a big pause. Now, silver is a lot more volatile. It's a noisier, it's an uglier chart. It works well when you're on the right side and it takes off, but it's a chart that's will shake you up. If you're a short-term trader, trying to get in and out of precious metals, silver make you pull your arrow, but it does perform exceptionally well. Gold typically kind of leads the way, and then we'll see silver kind of kick in usually a little bit later. Now, when we zoom out, obviously on silver long term, it's nowhere near the highs that we've seen in the past. It has definitely turned a corner. It was out of favor for a very long time, and really 2020 is when it kind of came to life. It's carved out a bottom, and it's building a launch pad to go higher. I think we could see silver go back up to about 35, maybe even like 37 and a half, somewhere in there potentially over the next month or so. But overall, it is a real volatile one. I think the safer play is gold, simply because I do think we're going to eventually get into a market reset, a financial reset, and I do think we'll see precious metals get into a little bit of selling, and gold will hold up way better than silver. So I think from an investor standpoint, gold is the play to be in. It has upside. It's going to hold its value a lot better. And then if and when, which I think it's more so when we have a market financial reset, then everything's going to reprice a bit. Silver is very volatile, so it will actually correct severely. It could be 30, 40, 50, 60%, like it did in 2008. And then you've already, gold will hold its value a lot better, but then you can invest in silver and accumulate and start stacking it at a really good rate. So to me, with what's going on in the world, I think gold's going to hold up the best, has more upside and a lot less downside. And silver becomes the investment later when it's more or less feels like it's on sale at a sharp discount.
And what do you anticipate for the stock market? Because I know last time we had you on, you were, I believe, sharing, big concerns for what we were seeing in the stock market and the possibility of kind of a reset or crash coming. Where are we right now? It seems like we're still pretty close to all-time highs.
Yeah, we are. The market is slowly getting weaker in the grand scheme of things. I believe we're in like kind of a key topping phase. I think we're very similar setup to kind of what we saw back over here in terms of we're running out of momentum. We're starting to see a lot of poor earnings. We're starting to see, non-farm payrolls weren't very good this week. We're starting to see a little pressure there. So overall, when we even look at the semiconductor space and NVIDIA, some of these big powerhouses, they're running out of steam. They've lost their upward momentum. They're not participating. They're not really even leading at all either. So that's not a good sign because they carry a good chunk of the weight of the stock indexes. So I do think the markets have room to push a little bit higher. I think the SP 500 could push maybe another 5% or so. I feel like if we push to new all-time highs from here, we've just had actually a pretty major cycle low in the chart over the past few weeks. Or if I was to just zoom into the SP 500, we've had a couple very significant cycle lows, which they don't show on this chart, but we had a multiple time cycles bottom out here, which was just a few weeks ago. We also had that happen over here. We had it happen over here, and we had it happen over here. So I think the markets are primed and ready to have one more push up, and then I think we could run out of steam. We've had a really good correction, and now we got a nice bull flag pattern here. This whole pause is actually building up energy that if it breaks to the upside, we're going to see a nice run. It's going to suck a lot of people into the market. It's actually very similar to this one, where you have a big pullback and then you have a bull flag. And then, of course, it ran higher. We had the same over here. It pulled back. We had a bull flag. It had a little bit of a shake up here with some news and Trump and stuff. And then it took off to the upside. So the markets are primed and ready for another leg higher. Yet a lot of people are moving temporarily here, kind of pretty nervous. Longer term investors like people 50 plus, they've been dumping and selling dividend stocks. People are getting really nervous, but the more aggressive traders are still piling into the market. Gold miners are top performing right now. We've got the ARK ETFs doing really well. So we do have aggressive traders in, but longer term investors are nervous. And we keep seeing bouts of institutional selling on the daily chart and on the intraday chart. And what this means is if institutions are starting to sell, they're unloading big blocks of shares into the market, into the average market participant, that is a bad sign. So typically when we get to the end of a stock market, we see everybody get generally pretty excited to own equities. And the general retail public isn't huge volume. And what creates trends are what the institutions are doing. And we're seeing them unload more and more blocks of shares. And they're the ones who are going to turn the tide when they all start to think like, we need to get out of equities. We need to lighten up our portfolios even more. I think that's coming. And we're seeing more and more of this type of distribution selling, which is eventually we're going to hit a tipping point. And when all the institutions are like, well, everybody else is dumping shares but us, we need to, that's when we go from net buyers to net sellers in the market. And that big trend turns around. And we have a big correction like we did in 2022. Stock market fell like 25%. I feel like this time could be a lot bigger because I think it's going to be a major market top. But the equities market is still in an uptrend, but man, there are warning and red signs, red flags everywhere that I think it's coming to an end.
Well, we really appreciate your time today, Chris. Thank you so much for coming on and sharing these insights with us. If people are interested in learning more, they can go to thetechnicaltraders.com. Did you want to share with us any last thoughts you had and what they'll find on your website?
Sure. Yeah. If you go to my website, you more or less get my morning daily analysis. You see what the markets are doing. We cover precious metals every day, and more or less I share every trade that I do. I trade ETFs from in my portfolio with you to shadow what I do. And I think the key right now is to make sure you've got an exit strategy. Eventually, these markets will roll over. Understand if you hold equities that you do not want to be holding them when they roll over. And gold is the boring, one of the best trades right now. And I know a lot of people think it moves too slow for an investment, but I'll tell you, it is nice to hold something that goes up or holds its value or barely corrects when everything else is in free fall mode. So sometimes the most boring asset is actually one of the best ones. So that's what people need to understand.
Fantastic. Well, Chris, thank you so much for your time today, and God bless.
Thanks. Always a pleasure.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for February 3rd through February 10th, 2025 while supplies last. This week we featured pre-33 AU $20 gold St. Gaudens coins at just $50 over melt per coin. We also have backdated silver Austrian Philharmonics at just $2.85 over spot. Backdated Canadian 1-ounce gold maples are just $59 over spot. And pre-65 junk silver dimes and quarters are at the lowest price in years at just $1.49 over spot. Pre-65 junk half dollars are just $1.69 over spot. And 1 10th-ounce Gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.